Welcome everyone, my name is Mike Hamilton. It's 6:35 in New York, 6:35 AM on the 21st of January. It's the day after we have the new president installed, and you're looking at the dollar index. So we've been on a massive leap up into mid-January, and here you can see we're sitting on massive support. So we pulled right back to a key area. But we've got a sell signal up here and a huge drop on the inauguration day. If we can close under this 108, then this dollar is done short term. I'm going to see a pullback to at least 106, if not further. If not, who knows, maybe even all the way back to September lows. However, if this holds, then we are going to go back to the highs and potentially beyond. What I think is going to happen, this is an incredibly bullish move, a nice little wave pattern. At the moment I think this will hold and the dollar will pull back. I would love it to drop under 108. The markets would certainly be happier. I think the bond yields will come down, borrowing costs will come down, and that would allow the Dow and the markets, particularly the US, to continue higher. So let's see, and this is it's a couple of big decent corrective waves back down to the support. Sorry, I'm screwing this up. So huge selling at these highs. We're out of this funnel pattern, so it will be quite the best thing that can happen to this is we bounce back into that drop zone and then continue the move to the downside, and we're not far off that drop zone anyway. But like I said, this holds. Even if we start holding up here to either today or tomorrow, that will see that push higher. Not a lot of data this week. We've got Bank of Japan meeting with a potential increase in rates in Japan from a quarter to a half. I'm liking this pound yen. I called it a day too early last week, but we did get a move from Friday into Monday. We've got all the support lower at 188, all the way back down here. So I'm just wondering, we're under the averages, so at the moment we are still bearish. But I'm looking, the reason why I called it last week too early is because I thought this area would hold, and we've drifted lower. Keep an eye on it. I have actually got a small position at the lows here today. UK jobs are out, UK job numbers are out, so I like the pound yen at this 190.50, 190.70. For a move simply into 193, 194. If you're prepared to sit there longer term, then we could go back to 201 and beyond. It had a lovely sweep early last year. So from beginning of last year, we moved up really well from 5th of Jan right into the summer, in mid-summer, and then we had a huge corrective wave back down to the January breakout zone. So we boomeranged all the way back. You can see we went 3 times faster than we went up. So if this does catch a bid, I think this will grind higher, back up to those highs. Bear in mind the pound yields much higher than the yen because of the differential in the rates. So this is the pound still has the upper hand here. Right, enough of this. Let's get on with the markets. So the gold is right up here, resistance. We've been up, this is the 4th time we've been up here since we popped up in November. So I think this is through and through. I think this could break through. So any pullbacks to 2700, if we see that now, we're only 2720, so that's possible. I think we're going to make our way back and find our way up to $3,000. Who knows, maybe even beyond. So all these dips are still viable. Let's see if that can, if we can get some sort of pullback 27.05 was yesterday's low, so any dip into Friday's low would be great. But this is only the first full trading week of the day of the year as far as the US is concerned, so that is still possible. Don't often look at silver. Silver is above the 30 mark. Yeah. I think this is buyable. Whereas this is a 200-day and a 50-day average, so we're sitting on the 200. We just closed above those two averages. So I think these dips, if we see $30 again, great. Might be worth holding out for that. But I think these metals and commodities are worthwhile. On the flip side, we've got oil coming off. So we've crashed into that ambush zone up there just under 80, and we're making our way back to I think 73.5 at least, if not 72, at which point, if that holds, then I think that will pick up. So we're getting a corrective move back. 73.40 is where we broke out from on the Friday, so I wouldn't be at all surprised to see that, and if that holds, then that bodes well. Let's look at tallow on the back of that. Question came in, is tallow going to push up from here? Yeah, I think this. So we've had the first wave to the upside here into that resistance zone at there at 25. We're pulling back to the 50-day average. So if you want to get in this, look out for 22. We're currently 23, and then I think we can make our way to 28 and through to 30. And if we have a really good year in the oil stocks, I think that could break through 30. But I would look at this stage for 2022 into 30 and then take profits personally. So that would be my strategy if you're interested in that stock. Other stocks, just trying not to make this too long a video, so let's get going. Let me find Shell. Has already been on a big run, so from September and the December lows, we've crept nicely back into resistance. Any pullback to 26.40 is buyable. So we get a corrective move back to 26.40. I suggest that if you want to get in this, that's the place, and then we might go back to the 30 quid mark on that one. I think the financials will do well out of this. Prudential is at long last getting bid, so it's similar to double bottom here as we've just seen in Shell. That's up from just under £6 to yesterday we touched about 6.80. I think any pullback to 6.40 is buyable with a move into £8 if it can stretch its legs up there. There's a lot of resistance on the way up. We've got the 200-day average above us, but I think the next touch, we've had a couple of touches of that 200 already. I think the next touch will be 3 and through. Legal and general. Any pullback to 225 is good on legal and general. Barclays has been on the tear. All these pullbacks. We had a severe drop in the summer, right back to base at 194, and here we are just under the £3 mark. Any move into 273 is now buyable. What will the target be? Let's have a look at the weekly. Sorry, weekly. This is a big resistance point up here, so you might find pullback closer to 250. As for a target, I would suggest 368 if it really runs, but we are getting extended up here. So we've had a decent run from 135 to £3, so I think if you're interested for a long-term trade, if you see 250 in the coming weeks, then get in. If you're in a short-term swing trade, then look for 275 and so on. This is a weekly chart on PZC, Cousins. It looks as if it's trying to base. It went down to that 75, we're holding. We've been down here a couple of times since November. So for this to work and pop, we would need to see that above this recent high in 91. If that pops, then I think we'll see 125, possibly more, possibly as high as £2 if that can really recover. But that's, let's have a look. I'm trying to draw a trend line here. Yeah, if we stay above that trend line and break through the top of that triangle up there at £1, then 125, 150, and possibly a move into £2 over. I'm talking months and possibly into next year, not a short zip up there. IQE, just quickly recover. IQE, I think, is basing, so it lost its CEO and plunged, but it plunged into a lot of support. So it's a cheapie, but speculative cheapie. If you want to buy 12, stick a stop under 8, and see if that can get back to 20 plus. Speculative. Well, we're all speculative, but that's more speculative than others. Vodafone is on this weekly chart has based around the 65. Possible move into 75 plus on Vodafone. Pullbacks to 65, 70, or not even 70 now. Pullback to 65 is good. So zipping back to telecoms. BT, if it has a bad hair day, it might go down to 120, 132, 135. Otherwise, this is a higher close on the weekly. This 140 could be a good place to get in, to see if we can go back to 160 and then break higher into £182. And a question came in about EasyJet. I think EasyJet's a buy here. I would love it to come back to 490, and it could well do it. If we go back to the daily, you're sitting on the 200 again. We've literally just touched the 200 today's lows. So we had this drop to 485 on the 16th. I would personally, I'd be patient. I'd be really patient with that, and then see if that could fall back into that support. If we do fall back into that support and hold at 490 plus 495, then I think we can wind up. Potentially the end of the year target could be 640. Okay, let me just find the other couple of there's a few other stocks you wanted to look at as well. So I'll have a quick look at Robinhood. Robinhood is storming high on volume. Any pullback to 43.70 is good. We're very close to the big 50, so let's see. It's gone basically, and I don't like buying high. That's why I'm talking about seeing if it can pull back. Once these things go, they're much harder to play if you're not in them. If you're in them and that looks as, yeah, they're 52 is the extension. Otherwise 43.90 is the pullback. I wouldn't enter at this high. I would let it go and then see if that could pull back in the coming days and weeks. Seeing Machines is obviously making an effort to, so we're recently at 5.4. Yeah, this 3839 was the support. If we can hold this 4, and we're just hovering around the 4 now, I think we could at least go back to that 5-4. Were we to break, I think the 6-6 and then possibly 7. It's a big sweep up here from, but it's a very thin stock, so it's it must be AIM being so cheap. So be careful. Don't jump in too high, and don't jump in with too big a stake. Protect your capital at all times. S3, it is holding. That push back into 260 is working at the moment. Volumes are picking up on this daily chart, so it does look as if it could go to 313 and potentially all the way back to that 360 drop. Good boomerang if we can hold up here get above £3 in the next few days, but then I think that could get back up to that high. And the volume does support that. It is seeing a little bit higher, increasing volume down at these lows. But any move under 280 could see that drop right back. But at the moment, it appears to be supported. Wow. This is a good one as well. So we've gapped up. All the time there's a gap there. We gapped up on the 20th of June last year and filled the gap on the 3rd of July and then went on a run. So personally I would set an alert for that gap fill. Where is my alert tool? I would set an alert for 139. Currently 170. That's the way I would trade it personally. It might pull right the way through that gap into 132 or lower. Could always go lower, of course. But I'd certainly start dipping into it at 139. Alright, I'll leave it there. I will talk to you during the week as and when something occurs. Alright, stay safe. Bye for now.